Investment strategy, the science of reopening. Scientists around the world are racing against time to overcome the overwhelming COVID-19 related hurdles that stand between us and the full reopening of economies around the world. Concerns over a second wave across US cities and Beijing, China, sparked a reality check among retail and institutional investors about the state of affairs in the real world versus capital markets. As the number of COVID-19 cases rise and ebb, will volatility return? And will capital markets revisit the March lows? We argue that this will not be the case for three key reasons. The ultra-loose monetary policy by the Federal Reserve and other major central banks will keep rates lower for longer. Fed Chair Jerome Powell has reiterated the Fed's policy stance to provide additional liquidity into the financial system. Governments around the world are posting record budget deficits to support the economies and face political pressure to gradually ease containment measures. Scientific progress in tackling the COVID-19 pandemic and the preparedness by the healthcare sector mitigate the risks of gradual reopening of economies globally. What does this mean for investors? The situation regarding second waves of infection remains a wild card and will continue to drive volatility in markets, as evidenced by the sharp sell-off on 11th June when the S&P 500 sank 5.9%. Clearly, the situation regarding infections will continue to evolve, but we expect the economic impact of subsequent waves of infection to be relatively contained. Bottom line, considering the risks related to the uncertain economic outlook, the 2020 US presidential election, rapidly escalating US-China tensions, and the fact that valuations have likely priced in a large part of the positive market factors today, we do not believe it is time to go overall overweight on equities. We would focus on maintaining diversified exposure with long-term structural winners and companies with resilient balance sheets that would benefit from a rotation into cyclical and value players as the global economy continues to reopen.